The reason I didn't lock interest rates in is I didn't think they were going to go up for some time. Now, we have some very intelligent investors, and some are very open with their thoughts, and they continually challenge Sentinel and advise us why we should lock interest rates in, and we haven't, and it's been to their benefit. Now, after 11 years, they're correct, we've had an interest rate rise. So I'd always said interest rates will go up. How much and when, we don't know. The costs of locking in interest rates, it's not just locking in 2.5% and that's it. There are other costs with the bank. So we continually review it, and if it was a cost benefit to investors, we would lock it in. Even now, at the rates that we're getting money at on a variable rate, it still doesn't justify locking them in. The other problem, if you lock in interest rates, and I know a fund that locked in a substantial amount of money at 4.5% for 5 years. The property market continued to rise, and when they tried to sell their property, the penalty to get out of the loan took all their profits from selling the asset. So you have to be mindful of that. It's not just locking in at what you think it's a cheap rate. There's a lot of other things there. Interest rates, we don't know what they'll go to. Reserve Bank doesn't know what they'll go to. Last year the Governor of the Reserve Bank said interest rates will not move until at least 2024. So they don't get it right. So no one's perfect. My view is that we will not see the interest rate rises that a lot of people are talking about. Now, I could be proven wrong, and interest rates change. And when people make their predictions, and I think when people were making predictions late last year, I don't think any of them expected Russia to invade Ukraine. Things like that happen. How do you take that into your calculations when you're making forecasts or predictions? I don't think any people would have expected the largest port in the world, Shanghai, to be closed for a couple of months because of China trying to eliminate COVID-19 altogether. How do people make those predictions? It's just a guess. I do mine based upon the amount of debt that people have in Australia, and you always find that more people buy at the top of a market, whether that's shares or property. So the people with the biggest debt are the people who have bought near the top of the market. Now, the top of the residential market in Australia is when interest rates are at their bottom. Now, if we have any meaningful interest rate rises, it will be very sad. They will be queued up to jump off the Sydney Harbour Bridge. I've seen it on the news already. People are terrified, and we've had interest rates have gone up 0.25%. What happens if they actually go up to a full 1%? Terrifying. Well, we've invested when they've been 7 and 8%, and we still made good money. So it's just how you manage it. Those things happen. That's not the end of it. It creates more opportunities, and we look forward to interest rate rises.